Hey everyone, the 10-year Treasury yield has just surpassed 5%. This is a significant event as it hasn't happened since before the great financial crisis in 2007 and 2008, when the 10-year Treasury yield crosses 5%. It indicates that investors are demanding higher returns to lend money to the U.S. government. This is due to concerns about potential repayment issues and increased market risk. So, what does this mean for everyone? Well, borrowing costs are expected to rise significantly. This will affect various aspects of our lives, such as mortgages, auto loans, credit cards, and even student loans. Essentially, everything will become more expensive. This is an important point that is often overlooked in discussions about interest rates. Now let's focus on something that hasn't been widely talked about: a curveball coming to the economy. I'm going to break it down step by step and shed light on this issue. Make sure to hit the like button, as that will help share this important content to educate others. Let's dive into the specifics. The 10-year Treasury yield has just crossed 5% for the first time in over a decade. As a result, mortgage rates are expected to remain high. For many Americans, their largest liability is their home mortgage. And currently, the average interest rate for a 30-year fixed mortgage is around 8%, according to Freddie Mac. This is bad news for those planning to buy a home, particularly if they have bad credit. Individuals with credit scores ranging from 640 to 650 can expect a staggering 9.1% interest rate for a 30-year fixed mortgage. The price of oil is expected to continue rising, which will result in inflation worsening significantly. As a result, borrowing costs on credit cards and debt servicing will become more expensive. This situation has implications for the housing market as well. With mortgage rates at 8%, there are fewer home buyers who can afford to make a purchase. This means that there will be a surplus of inventory at low rates, while insurance and taxes continue to increase. Consequently, home sellers will face increased pressure to sell their properties. Additionally, with a limited pool of buyers, the laws of supply and demand will dictate that prices will decline significantly. This is especially significant given that there are only 650,000 active listings in the market, and it only takes around 150,000 homes to hit the market to create a completely different dynamic. In light of these circumstances, being a buyer with significant cash reserves is advantageous, as you can secure the best purchase price. Even if rates decrease in the future, buyers have the option to refinance for a better rate. Ultimately, in real estate, the key to profitability lies in making smart purchases. Given this perspective, being a buyer or a renter with cash reserves or a solid mortgage plan is currently advantageous. It is important to note that mortgage rates will likely continue to increase, making affordability more challenging. Furthermore, the impact of rising interest rates will extend to student loans. Currently, only 500,000 Americans are paying their student loan debts, but starting from October 1st, 43.5 million borrowers will face this obligation. Considering that 2/3 of Americans have less than $400 in their bank accounts, it is unlikely that they will be able to afford an average monthly payment of $500. As a result, the number of loan defaults is likely to increase significantly. This situation will also affect car loans, which will become more expensive. Overall, the cost of various expenditures will increase, leading to financial challenges for many individuals. However, it is worth noting that there are also interesting developments occurring in the current economic climate. According to the Treasury report, the United States is facing a staggering $1.7 trillion deficit. This raises the question of how to tackle this pressing issue. It is clear that the solution does not involve spending additional funds on various areas such as the $60 billion directed towards Ukraine, $14 billion for Israel, $14 billion for the southern border, $10 billion for humanitarian efforts, and $7 billion for the India-Pacific region. These expenses only worsen the deficit situation. So, what is the proposed plan to address this deficit? The suggestion is to reduce future deficits by increasing taxes for high earners and corporations. However, it's important to consider who these high earners and corporations employ. In a time when consumers have less disposable income than ever, this tax hike will inevitably lead to more layoffs. The economy is undeniably in deep trouble, although authorities will attempt to persuade the public otherwise. They want us to believe that the Federal Reserve will pivot and change its position regularly. For instance, just yesterday, Jerome Powell signaled that the interest rate pause would continue. This news may have been welcomed by many. However, just 10 hours ago, Powell stated that robust economic growth may necessitate further interest rate increases in order to combat inflation. This means that interest rates will continue to rise alongside the current Treasury yields. In light of these developments, I anticipate significant investment opportunities in real estate, distressed luxury vehicles, and even businesses. Consumer spending habits will undoubtedly change, opening doors for individuals to capitalize on these changes and profit accordingly. This expected shift presents great potential for those wanting to make money. Remarkably, the government plans to utilize artificial intelligence, AI, to collect the revenue generated from these tax increases. The Internal Revenue Service, IRS, is already strategizing its implementation. According to their plans, the focus will primarily be on targeting wealthy taxpayers, the wealthy individuals and CEOs who possess millions of dollars in wealth are unlikely to seek the assistance of ordinary tax services like H&R Block or local IRS offices. Instead, they have access to dedicated legal and tax teams that ensure their tax affairs are meticulously managed and compliant. These teams meticulously organize their write-offs and other tax advantages, and even if they were to face an audit, they would be willing to invest the necessary resources to address any issues that arise. Contrastingly, the IRS tends to target the middle class when it comes to audits. The reason behind this is that middle-class individuals are more likely to simply pay the taxes owed, as fighting it would be financially burdensome. To enhance tax collection from high-income earners, partnerships, and large corporations, the IRS is implementing plans to leverage technology such as artificial intelligence. This move has the potential to revolutionize tax compliance, but may also pose challenges to the agency. During periods of economic prosperity, even in powerful bull markets, the wealthy tend to possess superior information and exit at the market's peak. For instance, in 2021, Mark Zuckerberg, the CEO of Facebook, now Meta, sold significant amounts of shares every day. CEOs and executives like Zuckerberg benefit from more informed teams, greater financial resources, and more authoritative decision-making capabilities, enabling them to maximize their profits. Even if the IRS were to solely focus on the ultra-wealthy, it would inadvertently create an opportunity for them to capitalize on distressed real estate assets. In the current situation, it's crucial to consider whether we will be spending more money, sending more resources abroad, and sending more money overseas. In my opinion, these actions will indeed be taken. This situation has only just begun, and we are far from its end. As a result, taxpayers will bear the burden and have to pay up. Our money's cost will rise, and energy prices will also increase. However, I don't mean to scare anyone, but rather to prepare people by emphasizing the importance of facts. It is essential to understand what is actually happening and position oneself accordingly. By positioning oneself for the future and making smart moves in the next few years, one has the potential to make a fortune. However, ignoring the situation may prove to be a mistake that will be regretted in hindsight. It is crucial to pay attention to what is happening and seek the expertise of a skilled accountant who will be as valuable as gold in the coming times. Having a strong business and staying informed about the constant and significant changes that are happening daily are essential. Please feel free to leave comments and start a conversation about these matters. We encourage discussions and aim to provide support.